Hello and welcome to Lonsec's June market update. Firstly, we'll look at latest developments and then we'll turn to the outlook. Well, the most recent latest development has been the US data has continued to be quite robust, and at the same time the rest of the world seems to be stable at the moment. This has led to the US Federal Reserve talking about increasing interest rates again in the US economy, with the market pricing a 20% chance of another rate rise in June and a 60% chance in July. Markets don't seem to be as bullish as the US Fed, with the US 10-year bond yield not really moving much, still printing around 1.8%, while the US dollar has climbed just a little bit but not too much. The oil price has been sustaining a level around $49 to $50 a barrel, while other commodities have retreated after some strong gains in February and March. So we've seen iron ore retreat back to around $48 a tonne from $60, and gold has come back to around $1,200 an ounce from $1,300 an ounce. In Australia, we continue to see quite strong growth figures, with the latest GDP print coming in at 3.1% in the March quarter, which was quite strong. But ironically, inflation actually continues to fall, and inflation now down to around 1.3, 1.4%. And for this reason, the Reserve Bank started to decrease rates again in May, with the first rate cut for a year coming through to drop the interest rate to 1.75%. This has caused a retreat in the Aussie dollar, with the Aussie dollar coming back now to around 72.3, while the 10-year bond is also quite low at 2.23%. Turning to the outlook, we find that the market is looking for interest rates to slightly increase in the US over the next 6 months. Despite that, the market's been able to handle it quite well, and the US market has been pushing up against the 2,100 resistance level now that it's been there for the last 18 months, and it looks like it's threatening to break through that level. We're coming up to the July nominations for president and then the US election in November. There's also a vote on the British vote on whether Britain stays in the EU. That is coming up in 23rd of June, with a Brexit viewed as possibly a bit of a volatile event for markets. In Australia, we've got the July 2nd election coming up, which seems to be neck and neck at this stage between Labor and Liberal. So it seems to be holding back a bit of business confidence and investment at the moment while that is going on. And then we have the RBA coming up and possibly further interest rates cuts in August. Despite the strong growth figures, the market is still expecting growth to slow throughout the year, and that inflation is more of a worry than growth, or low inflation that is. We then turn to the August profit season for the Australian share market, which will be coming up, and then we will be looking at US reporting season following that. Overall, we still remain positive on the US and Australian outlook. The rest of the world seems stable at this stage. The key risks to look out for remain in the rest of the world in terms of Europe, where growth and inflation remains pretty low, and there's the threat of the Brexit coming up. But also in Asia, growth, will it continue to slow, and will inflation continue to disappoint? So they're the key risks at the moment. That concludes our June update. Thank you for watching. We'll be back in July for another market update.